What's up everyone, it's Scotty with MoneyVest. We've got lots to unpack and discuss in this video with the Nasdaq rallying a little bit over 1%. We had the S&P 500 up over 67 basis points and the Dow Jones also pushing higher, up over 87 basis points on the day. So hope you guys are doing phenomenal. And we are back after the short trading week from last week in observance of Labor Day. And of course, it was a red week, and now we are back to some gains here on the back of technology with Meta, Amazon, and Tesla rallying on the day. I did some buying on the day today. So again, if you want to get access to all those alerts and find out exactly what options and what stocks I'm trading and buying, links are going to be down below. Don't forget to subscribe and of course drop a like on this video as well. Of course, our fundamental technical analysis courses as well as options course are also going to be down below with that link in the description. So stocks notch back-to-back wins. Monday, Nasdaq pops 1% as technology shares rebound. So Jamie Dimon says it's a huge mistake to think the economy will boom with so many risks out there. So a little bit of a warning from Jamie Dimon, pretty much suggesting that the healthy consumer balance sheets and rising wages are supporting the economy for now, but there are risks ahead. And he also says that topping his concerns include central banks reining in on liquidity programs via the quantitative tightening, something that we have talked about in one of our previous videos. In fact, many of our previous videos. And he says that governments around the world spending like drunken sailors. And to say the consumer is strong today, meaning you are going to have a booming environment for years, is a huge mistake. Now, to his point, I think there's some truth to that is correct. That right now, of course, we had this outsized move in consumer spending. We've got retail sales that are going to be coming out later this week, which are going to give us a little bit more insight into the spending of retailers and consumers and so on and so forth. But of course, long term, when we look at 10, maybe 20, 30 years out, I think the US and most developed economies are going to normalize back to a more stable rate of growth. And of course, they're not going to be labeled as booming economies, but they are going to continue to grow as there is going to be more productivity, more technology, more innovation, and of course, now not to mention artificial intelligence involvement as well. There is going to be some level of growth for these economies. But of course, it's not going to be, quote, booming like some developing economies such as India, maybe some other countries in emerging markets that are growing at a much faster rate compared to some of the outsized and again much bigger economies like the US and China. So yes, I mean we know that we can't expect this booming sort of growth rate forever because consumers right now were strapped with a lot of cash because a lot of the stimulus checks and the quantitative easing programs in the last couple of years, and eventually that will start to kind of stall. And we could normalize back to a more moderate rate of growth. And of course, stock market, of course, last 2 to 3 years, the expectations have been very much different from investors because we've seen a lot of significant gains, a lot of significant losses. The markets over the last 3 years have been a lot more volatile than what they have done in the previous years. So that's something to keep in mind. Now, Oracle reported their numbers. I did a video on them earlier in the week, or actually over the weekend, going over Oracle's potential earnings year. They come up short on revenue, but again, touting AI cloud contracts, they did drop a little bit after hours. A little bit over 9% is what they basically dropped, and EPS came in $1.19 per share versus $1.15. And revenue came in at $12.45 billion versus $12.47 billion as well. So shares did move 9% lower in extended trading. I did mention that, for a company like cloud-based company, they do have a little bit more debt. Valuation is a little bit more dislocated to what I believe is appropriate. And they do carry some risks related to the overall business and, of course, the competitive landscape. But nonetheless, it's a phenomenal company in itself. And at better and better prices, it will start to become more attractive and more appealing. So wanted to do a quick update. I'll most likely do another video on Oracle, kind of giving you guys an update on that as well. But they did drop over 9% on a miss on revenue. Now, going over to PayPal. Kramer, this is a huge buy signal, folks. This is probably the biggest buy signal you can probably ask for in the market. So Kramer's lightning round. PayPal is a, quote, value trap. So again, this was during Mad Money. So obviously there was not a lot of thesis backed by this statement because of that lightning round is very quick and it's just a few seconds per stock. But I obviously disagree. I don't think that this is a value trap. This is just because the stock price is beaten down doesn't make the company irrelevant or more of a value trap, because I mean free cash flows are good, earnings are strong. It's a consistently growing business. Just because the number of active accounts started to stall a little bit last couple of quarters doesn't make it a value trap all of a sudden. Of course, if this starts to reflect in the numbers, yes, it's going to be a bit of a problem. But I can tell you right now, I've moved my business to PayPal, and I've also known a couple other companies in the US that are doing millions of dollars in revenue per year have moved from Paytrace, Spectrum over to PayPal as well. Like, they're moving to PayPal because it's more global, it's more reliant, and you can do everything on one platform. So there is going to be, in my opinion at least, increases in the actual TPV, the total payment volume, over time. But of course, the future quarterly earnings will show that. But that's your buy signal here. Now, Qualcomm, there was another huge catalyst for Qualcomm that says it will supply Apple with 5G modems for iPhones through 2026. The stock was up close to 3 to 4%. At one point, it was up like 6 to 7%. But this is a huge catalyst for Qualcomm, because it said Monday that it will supply Apple with 5G modems for smartphones through 2026. Right, over the next 3 years. That's a significant amount of revenue that this particular segment of the company can generate in the future, right? Because Apple, the amount of iPhones and the amount of hardware they sell, they're probably the biggest hardware company in the world, and Qualcomm is going to be providing the chips for these smartphones. So it's a big catalyst for this company. I'll probably do like a video on Qualcomm very soon. And Tesla shares obviously rallying over 10% after the Morgan Stanley upgrade. I did a video on this earlier today going over the massive upgrade from Morgan Stanley, bull case target of 550 with a price target of 400, overweight rating, and a top pick. So everything that you can ask for from a bullish catalyst from an analyst came through from Morgan Stanley, and Tesla obviously rallying on that news. So this is what the markets look like. A lot of greenery, especially for Amazon, Tesla, Meta. Amazon and Tesla are now two of my biggest position. Meta, I've trimmed down a little bit, but it still remains a pretty decent size. And Google here up 39 basis points. Qualcomm pushing higher, as I mentioned, on that catalyst. Microsoft, Apple were also up. Energy was slightly down on the back of energy prices, and of course industrials, more specifically Raytheon coming down over 7.8%. NVDA was flat more or less, and AMD also slightly down. I did start a new position in advanced micro devices. Like, if you want to get access to all these alerts, link's going to be down below, because I did do a little bit of buying and will continue to do some more buying later this week and next week. And of course, as September continues, if we do see some more seasonality and some more sell-offs in the month of September, I will most likely be dollar cost averaging more. So this right here again is the entire market. So Amazon, Tesla, Meta kind of having those outsized moves. So consumer cyclicals, materials, comm services, defensives, all pushing higher, with energy the only sector that was down in the last 1 week. We've got utilities and comm services pushing higher. Everything else is down. And in the last 1 month, of course, technology, energy, comm services, the three leaders in the last 1 month. And of course, every other sector is straight up down here. Coffee prices, ethanol, lean hogs, oats, all pushing higher, with orange juice, Nikkei. We got NASDAQ pulling back, and we got Bitcoin here a little bit over 25,000, and Ether now back under 1,600. So Bitcoin and crypto, just Ether, just all of them really having a very, very bad day. They continue to sell off, and we're seeing a lot of pullback and a lot of dips for this particular sector. So coming over to crude oil, it's starting to stall a little bit, very, very flat on the week, up just over 7 basis points, and it's now starting to move really sideways. Support level is going to stay put at $81, $82 a barrel, with a resistance all the way up to $93 a barrel. So we're kind of like in the middle of that range. Support down below, resistance up top, and right now, right in the middle. Talking a little bit about crypto. So again, Ether getting a bit of a breakdown here below 1,600. So that's resulted in a lot of crypto mining stocks and just crypto stocks in general to sell off further. So like, for example, Marathon, Riot, CleanSpark, all of them pulling back pretty significantly. And of course, Ether here back under 1,600, and Bitcoin here also selling off down to its next support at 25,000. So it's been very, very weak. And of course, there's been a lot of downtrends and selling pressure for Bitcoin and for Ether. So we're back down to the same support as we were back in June of earlier this year. Going over to volatility. So very, very muted, very flat. So not really moving much, still sub 14 and a little bit down 14 basis points. And going over to S&P 500 now. This right here is the overall pattern, which we will also go over the other chart, which we are still very much in the context of this overall downtrend, right? So nothing has been decided yet. I just want to be very clear that in terms of this overall downtrending channel, we are still very much in a lower high. So if you come over to a weekly chart, you will be able to see that a little bit better. As you can see, this rally pulled back here in the 3 weeks in July, and of course a little bit into August, down 5.6%. Then we rallied a little bit back further. Then we had a red week last week, as I mentioned earlier in the video, and right now we are slightly up over 60 basis points on Monday on this week, but we are still very much in the context of this potential downtrend. If the S&P can break past 4,500, break past this previous high, then there is possibility that, okay, this was just a small hiccup. This was just a small setback, and we're back to making higher highs and higher lows. We're back to potentially making our way back to all-time highs. But of course, if we do get rejected at this yellow line, and of course this resistance, which is sitting at 4,500, 4,530, then it's possible that we come back down to retest this support at around 4,300. And a breakdown below that level is certainly not going to be great news for the market. Same thing is true for the NASDAQ as well. You can see that, yes, we did push higher on the day, up over 1%. That's phenomenal. This is very good. But we're still in the context of this potential downtrending channel, which is forming right now with these lower highs and lower lows. So that's something to keep in mind. We're not out of the woods yet, and resistance is going to be all the way up to 14,000. So if you don't break past that level and get rejected and sell right back down, well, then that tells you that, okay, sellers are gaining some momentum and buyers are not able to push us past that resistance right now, and they're finding it a little bit more difficult to get past these levels. So 14,000 all the way up to 14,400, those right there are a couple resistance levels, and of course support level down to as low as 13,000 for the NASDAQ. Now, going over to some individual stocks, Apple on average has performed really well during the iPhone launch events, and tomorrow is the big day. So Tuesday, September 13th is when they were, or September 12th. Yep, September 12th is when they were expected, or when they are expected to announce their new iPhone 15. And of course, we've got a resistance at this lower high, and a support, very strong support that's sitting inside this green rectangle in the 170s for Apple. And on average, it has done 8% over the S&P 500 in terms of that outperformance during this time, during the iPhone launch since 2016. So the success rate, the hit rate is really high. So I wouldn't be surprised if it does gain some momentum on that iPhone launch. And we'll obviously talk a little bit about the pricing, the spec sheet, everything that's Apple is reporting and launching. Going over to Amazon. Amazon, I did took the liberty to add some Amazon today, up over 3.5%. As I mentioned in one of my previous videos, that this is a growth stock that is only just getting started with profitability. Very nice move to the upside, and next target and resistance is going to be a 146. So this right here is going to be that level to watch, and I did add some Amazon today, couldn't help myself. Support level is going to stay put at 136, 137, all the way down to 126 for Amazon moving forward. And again, I have no doubt, I've done my fundamental analysis on this company, so make sure that you do check out my videos from the past. Talking about Tesla with a massive move up over 10% here. Very, very nice potential bull flag breakout here, so you can see that we were consolidating sideways here with a very nice break to the upside, getting a lot of volume on the day, up over 174 million shares traded for Tesla. And this right here is going to be that next resistance. We are sitting right there at 277. So that's going to be that next level and next target to watch. In fact, we did get up to as high as 274, and the next resistance is going to be all the way up to 312 to as much as $350 per share, kind of inside this higher high and higher low pattern. So you can see that we are consistently just making these higher highs and these higher lows. So that next level is going to be sitting right there. It's a really poorly drawn arrow, but this right here is going to be that next resistance and that next target in the 300s, 320s, 350s for Tesla. So lots of momentum, of course, on Morgan Stanley's upgrade. So like I said, next resistance is going to be 277. Support level is going to turn down to 260 now for Tesla. Talking about NVIDIA now, NVIDIA is starting to show some signs of weakness. There is a bearish divergence forming. We did see the MACD cross below the signal line as well, down about 86 basis points from its all-time highs. The stock is down about 10%, give or take. But again, NVIDIA is like incredibly volatile. So I'm not surprised. And next support and target's going to be at $401. So this is a level where I could see NVIDIA come down to. That's going to be about a 25% sell-off or 20% sell-off from its all-time highs, which I think is more than reasonable considering what NVIDIA has already accomplished this year. And again, resistance is going to be all the way up to 520s. And of course, we've got an all-time high sitting right there at close to $500 per share for this absolutely insane of a stock. Advanced Micro Devices continues to show signs of weakness, so down about 73 basis points, still in the context of this downtrend, and the support and the low is going to be at sub 100, but I will be a lot more interested in adding more heavily in the 80s and of course 60s for Advanced Micro Devices, but this right here is the downtrending channel for this company right now. It's just been moving sideways. It is up like close to 60%, but it's definitely underperformed a lot of its other peers, like especially NVIDIA, SMCI, and I don't know how much Qualcomm is up on the year, but it might be a little bit less than AMD. So yeah, definitely. I mean, it's just flat. Qualcomm's really not gone anywhere, but AMD, of course, has done a lot better, but still a lot less compared to some of the other companies in the chip sector. Now going over to PayPal, and PayPal here up over 1.5%, and maybe the market's kind of starting to read into Kramer's buy signal here, but support level is going to stay put at 57.50. So this right here is going to be that support with a resistance and a target all the way up to $69.70. We've got a huge gap to fill for PayPal eventually at those levels, and we are still very much in the context of a downtrend. So lower highs and lower lows coming in since April of 2022. So this right here is the overall pattern where we just constantly are trading with these lower highs and these lower lows and not really going anywhere, but support level very strong at $57 and resistance at $69.70. The moment PayPal is able to successfully break past these resistances at $70 and $77 is when I do believe that the trend will overall shift to more higher highs and higher lows, a little bit more towards the upside, and it will shift towards an uptrend for PayPal. Talking about Square, and Square here also up over 1.6%, but very much in this green rectangle sitting right at that massive support in this area of demand, which it's bounced off of several times. So you can see that previously in June of 22, in November of 22, this right here a couple times in May of 22, or May of 23, and this right here is where we're at once again. Now, just because it's bounced off of these times every single time doesn't mean that we're going to see another one of these rallies all the way back up, right? That's all. It's trading is all a probabilities game, right? You're just basically trying to understand the game of probabilities, game of odds here. But so that's the thing, right? Risk and reward is far more appealing here than it was at any point before for Square. So it does make sense from a trade idea perspective, even though we did have one, we did start to see a little bit of that momentum back up. But of course, Square starting to sell right back down at that support at low 50s. So keep that in mind. Of course, a breakdown below $51 is going to really break us down from this massive area of demand and that support, and could bring us down even further in the 30s and 40s. So Block, I really do like from a technical perspective. From a fundamental standpoint, it's never really just kind of been attractive to me, like appealing, because PayPal and Square, there's like night and day difference. PayPal is massively profitable with a lot of free cash flow, and Block is still kind of working through those challenges to become profitable, and the margins are nowhere near close to PayPal's because a lot of their revenue is coming from Bitcoin. Next up is going to be Meta Platforms. So Meta had a very nice day today, up over 3.2%, so getting a nice move back up to $307. Resistance is going to be $326 next, so this right here is going to be that level to watch, and a support level stays put at sub $300. So $298, closer to that level, is going to be that support, all the way down to $257. So Meta is one of those few companies that is now starting to break down, not break down in the sense that it's coming down, but from a sense that it's breaking up away from this downtrending channel. So it was making these lower highs and lower lows, but it didn't quite make a lower high here, at least not what the pattern is suggesting to be. So if you do get a breakout above 325, that will be a massive shift in the overall pattern, and it's possible that we continue on this potential uptrend with some higher highs and higher lows. And this was just a small hiccup, a small setback for Meta. Talking about Netflix here, and Netflix also showing signs of some consolidation, so it's mostly been trading sideways here in that range. So we got a resistance at 458 and a very strong support sitting right here at 410, and it's really just been trading sideways in that range for a very long time. Google, on the other hand, continues to move higher, 137.74. My option does expire later this week, I'll see if I want to roll that option out a little bit to 140s or 145. I'll let everybody know in the Discord, but this right here is going to be that resistance and that target at roughly $144 with a support level sitting roughly at around 127, 132 for Google. Talking about Microsoft, and Microsoft here also starting to move up over 1%, so very nice move to the upside. It is still in the context of this downtrend, so it's still at that resistance right now, so we'll see if this continues, if that momentum carries forward. Next target and resistance is going to be at 351, or if you get rejected here and then potentially come down to 313. So still very much in the context of this downtrend, so I'll keep that intact for now. Finally, we got Enphase and Shopify. Enphase seeing a little bit of that momentum up over 1.6%, but still inside this green rectangle, so massive amounts of demand here, in my opinion, of course, sitting at the same support as it has previously bounced off of several times, once, twice, and once again, we're back at that good deal or that green rectangle in that support area for Enphase. So very, very oversold, a huge underperformer in 2023, down 54% on the year. And next up, finally, we got Shopify. And Shopify here obviously did get a huge rally on that Amazon partnership. And right now, the resistance is going to be at $66 with the support level sitting put at $54 per share. And right now, we're just mostly consolidating sideways in that range. So bottom line is that very strong green day on the back of technology and a lot of stocks here pushing higher. But just be careful considering that we are still in the context of a potential downtrend. And there are some resistances and support levels that need to get broken in order for us to have a clear directional understanding of the markets as well. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in finding out exactly what I'm buying, when I'm buying it, and link to our members only videos and intrinsic value spreadsheets. Everything's going to be available down below. As always, happy investing. I'll see you all in the next video.